welcome to the show. You're watching Big Deal and I'm NISHA PODDAR. There's never a dull moment on the deal street. So let's take you through the big developments of this week. Nirma pips Piramal and JSW to clinch the Lafarge deal. Nirma to pay a whopping $1.4 billion for 11 million tons of cement assets. Sinex buys BPO Minax for $420 million. It will merge Minax with its Concentrix BPO unit. This is the second sale of Minax. Remember, in less than 3 years, clutch of financial investors bought Minax from Aditya Birla Group for almost half the price in 2014. US-based Terrapin 3 acquires Yatra.com at $218 million enterprise value. Yatra.com to list on NASDAQ via reverse merger with the US-based blank check firm. The government plans to sell a 15% stake in state-owned NBCC through an offer for sale route, expecting to raise about 1,700 crore rupees. Japanese telecom major NTT Docomo moves Delhi High Court to enforce international arbitration's ruling of $1.2 billion fine on Tata Sons for their inability to buy back NTT Docomo's 26% share in their joint venture Tata Teleservices as initially agreed upon. Lenders reject Bhushan Steel's proposal for an S4A scheme and ask the promoters to sell controlling stake in the company. Bhushan Steel is up for grabs again. Let's take it straight to the big development of this week. And remember, 2 weeks in a row and cement deals are stealing the show. After JP Ultratech deal, it's Lafarge which has picked up Nirma to sell its 11 million tons of cement assets for a whopping $1.4 billion. That is around 9,400 crore rupees, much higher than what the street had really expected. But Lafarge deal has been quite eventful from the very beginning. We all know about that. I will tell you the latest straight from the Situation Room. It was a race for Lafarge's prized assets. Stakes were really high. For Ajay Piramal, it was an entry into the cement sector that he wanted. For Sachin Jindal, he could have beefed up cement vertical and given a great launch pad for Sunfast Jindal. Nirma, the dark horse. This deal meant cementing its position in the sector from minuscule presence to now a big player. That's what drove Nirma to offer over 1,000 crore rupees more than the nearest competitors, Piramal and JSW. For Ajay Piramal, it was a pure numbers game and he stopped short of 8,500 crores dispassionately. For JSW, there were many factors at play and in the final lap, Sachin Jindal is said to have increased the offer by 1,200 crore rupees to match Nirma's 9,400 crore rupees bid. It turned out to be a competition at its best, and in the end, the winner is... No, not Nirma, too soon to say that. It's clearly Lafarge Wholesale, the seller of the asset. And one can't obviously forget the investment banking teams of Citi and Upward garnering hefty revenues from this deal. It's time now for the big interview on the show. And Singapore government's investment arm Temasek has about, remember, $8 billion invested in India. And every year they put in about $1 billion of investments. I caught up with Rohit Sipahi Malani of Temasek to find out about their investment strategy. And I started by asking him about his outlook on India as an investment destination.
India today is the fastest growing big economy in the world, right? The macro is looking very good. Current account deficit, fiscal deficit, inflation under control. It doesn't have the issues that most other markets have around debt, demographics, deflation. And actually it's one of the few markets where capital productivity is actually increasing. So from all those perspectives, you know, India's good. And from that perspective, last year was year where we made the highest investments in India ever since the global financial crisis. And if you look at the last 5 years, we've been investing over $1 billion a year on average in India.
So how much did you deploy last year? And your divestments have also been at record highs in the last financial year.
Yeah.
So how much of divestment did you really do? And what is the plan for this financial year? How much money are we seeing being pumped into Indian assets?
So look, we don't disclose specifically how much we invest and divest, but as I said, last year was the most active year for us since the global financial crisis in terms of dollars we put into India. And I can also say that over the last few years, we've been seeing a steadily increasing trend in the amount we've been investing in India. We had, last year when we reported our total exposure to India by underlying assets was about 4%.
Right.
This year, it's closer to 5%.
Okay.
So we have steadily been increasing our exposure to India. In terms of how much we'll invest this year, ultimately we're very much a bottom-up investor. So it depends on what opportunities we see at the right valuations. There's no fixed amount, but we want to do more out here because it is consistent with the themes that we're looking for.
Looking at your returns for the last financial year, do you think that you will now re-strategize also to be more aggressive in emerging markets like India?
Look, I don't think anything has really changed in the last year. Like I said, it was just mark-to-market movements as of a particular date on March 31st. I think we have been consistently looking to move our portfolio in favor of sectors that we see having secular trends. And India falls in that bucket.
Right.
Because India does have a growing middle income population, which is where the consumption themes come into play. India does have globally competitive companies in sectors like pharma and IT, which is our theme of emerging champions and global champions. So clearly, India is a core part of our strategy. And as I said, we've been steadily increasing our exposure over the years.
All right. Any new sectors that you're adding in India? Because IT, healthcare, consumers, these are darlings of most of the private equity players. You have some investments in e-commerce as well, some in energy. Any new areas that you're looking at? Any particular reason for that tinkering that you are going to make for India?
So 5 years ago, our portfolio in India was primarily banks and telecom. Today, we are much more diversified, right? I told you globally, we're trying to have more of tech, insurance, life sciences, which is really both healthcare and pharma and consumer. And those themes are true for India also. We're looking to increase our exposure in all these subsectors in India, and we have steadily been doing that. So these were some of the more active sectors for us last year, and I expect they will continue to be going forward.
Okay, what about banks and insurance? Of course, you've made 2 investments. You have investments in Max and ICICI Pru. Both could really see value unlocking going forward. How are you positioned in them? Would you be exiting post the merger with HDFC Life for Max?
Look, we obviously can't talk about specific investments and what our strategy would be. What I can say is that insurance still is a very underpenetrated sector in India. It's a sector where we hope to steadily increase our exposure over time. There aren't that many opportunities because most insurance companies have been private and there were foreign ownership limits, etc. so far. But as there are more opportunities, I would expect that we will try and increase our exposure to that sector over time.
And what about banks? Of course, globally, Standard Chartered Bank is something you have so much exposure to. Do you see something like that in the Indian banks as well? Or have you consciously been out of the FIGs? Not so much insurance, but the rest of the FIGs?
Actually, banks have consistently been an active part of our portfolio and continue to be. So even right now, most of the larger banks are more public market positions, but we do have exposures to ICICI Bank, Axis Bank, HDFC Bank. And so banks always do form a core part of our portfolio out here. Now, obviously, we look at it in the context of valuations, when they're attractive to buy and when we may trim our exposure at times when we think that valuations are run up too much. But we do see banks to consistently be a part of our portfolio out here in India.
All right, but not a substantial part, the way you've taken instancy. Of course, regulatory hurdles may also be there, but have you given that a thought, and probably if approvals are given, probably would you look at that?
So it really comes down to value, right? On financial services, we have reasonable, and we have been increasing our exposure. So we also have 100% subsidiary in Fullerton India Credit. We also bought Silicon Valley Bank India out here last year. We also have stakes in other NBFCs out here. So if you look at financial services as a whole, I think we have a reasonable exposure. And now recently we've been doing other stuff around the fintech space. So we invested in BillDesk last year, we invested in Policy Bazaar last year. So broadly, I think financial services globally is about 23% of our portfolio. And we do think it will be a reasonable part of our portfolio in India for the foreseeable future.
All right. So upbeat as far as financial services sector is concerned. What is your positioning on the healthcare space? Of course, US FDA concerns have been looming large for most of the big pharma companies in India as well. Is that one of the restraints that you feel? And how will your overall outlook be in terms of investments?
So look, ultimately, as I said, we are very bottom-up, so it depends company by company. But we like the pharma sector in India. The world has many issues right now in terms of growth and everything else, but there's some sectors which will always do well, right? And we think pharma and generics companies basically is one such category. So we have investments here in Intas, in Glenmark, in Sun Pharma, and in the healthcare services side. I mean, that's an area which is so nascent in India that we see huge opportunities. We have investments here in Medanta, it's a global health, and we have investments in HCG. And so, there is a fair amount of exposure that we have overall to the healthcare pharma and healthcare services sector. And we see that continuing.
All right, hold your thoughts there. We'll take a short break on this show, but come back with more investment thoughts and what is in store for India when it comes to Temasek's financial engineering as well as strategy. Stay tuned to CNBC TV 18.